The market rally continues for yet another day. We're not going to look at the individual day-to-day movements, the small-term, short-term price action. In today's video, we're going to take a look at the fundamentals, read between the lines, and parse out the very crucial things and pieces of information that tell us how to be positioned. Tomorrow we get the CPI, big event. Certainly important, but not so important, and we're going to explain why in a second. What we think is bigger is next week, Tuesday and Thursday, we get the Fed meeting where they're expected to hike 75 basis points. Why do we not think the CPI is a big deal? Isn't it going to dictate what the Fed decides to do? Not so fast. A lot of people want to claim that, inflation falling like a stone equals Fed dovishness, therefore the market needs to rally. It's not such a clear case that way. Why is it not such a clear case that way? Because the Fed is going off of history, and they're doing what history tells them, and they don't want to be wrong. They were wrong the first time, they don't want to be wrong again. So what does that mean? Well, if you look at the past inflation spat that lasted over 10 years, it had several very violent increases and very violent decreases in inflation. It had oil shocks. It had everything we're going through today, except it continued to extend. And this is something Ronald Reagan talked about in his first address as president. Why did it choose to extend? Because the Fed and the politicians and the economy would quickly pressure the Fed as soon as inflation was starting to come down and jobs were starting to tick up to ease on the rate hikes because jobs were starting to hurt. And then inflation would come up and they'd say, hike the rates. They were flip-flopping. They weren't able to commit. Inflation would come down, and then they'd pivot, and then inflation would go back up. And then inflation would be high, they'd pivot and come back down, et cetera, et cetera, et cetera. That's why this time the Fed has, on multiple occasions, said there's going to be some pain. There's going to be an increase in the labor market. Inflation is very hard to tame if the unemployment rate is below 5%. Right now it's at 3.7, was it 3.5? So they're prepping us for unemployment losses. They don't want to get to a period where we see some unemployment and everyone starts clamoring around, hey, we need to lower rates, we need to lower rates. No, they're saying we're gonna be higher for longer. As a matter of fact, right before the blackout period, they're talking about additional rate hikes in 2023. They've only gotten more and more hawkish. Last year, you were like an outlier if you thought they were going to be at 1%. Now it's 4% by the end of the year. So, seems like the trend is hawkish. We don't fight the Fed. Finally, last point on the CPI. This is the one that hammers it home for the CPI tomorrow. Bullard said that even if we get a good CPI this week, tomorrow, doesn't change the Fed's path. He still supports an unusually large rate increase. So, 75 basis points. The tone is hawkish. We're not going to fight it. Whether or not inflation is coming down is irrelevant. The Fed knows what it has to do, which is increase rates and don't succumb to the pressure that's going to come. Because if you look at history, every time the Fed succumbs to the pressure, it flips. That's just how it works. You have to bring inflation down and then not immediately cut rates so people go out buy Lambos. Everyone's let's go, let's go, let's go. No, you bring rates up and you keep them up. You quash inflation down and then you keep them up. So people don't, even if you give them money, they don't want to go out and spend it. They don't want to buy a car. They don't want to buy a house. Screw that. No, you really just, you get it down, you get the demand down, and you get a reset. We need a reset. That's as simple as it is. I mean, we got so close to Bitcoin, Dogecoin. I mean, remember that? No, we're not doing that. That's like an inequality disaster waiting to happen. I like Bitcoin, but at the end of the day, some centralization of the currency is good. I mean, it is good. I get it. There's many cases, printing money, yes. but we avoided a catastrophic. The COVID crash was not nearly as bad as it needed to be, and the reason for that is that the Fed was able to step in. So they stepped in, they made a mistake. Guess what? They're going to correct it, and they're going to go hard on correcting that. That's what they're saying they're going to do. You didn't want to fight the Fed on the way up, okay? And you don't want to fight the Fed on the way down. I mean, it's really that simple. These people are trying to say, oh, gasoline prices are falling, inflation is going to come in 0.2% lower than expected. They're not listening to the Fed. And the exact same thing that happened at Jackson Hole. The market just rallies every single day, one after another, as the Fed is saying what they're saying. And then they just get hit over the head when Jerome Powell speaks. And has to use words like forcefully and pain. He has to use those words because the market's not doing what they want it to do. And they're saying the market's underpricing the risk of higher for longer rates. I mean, you fight that at your own peril. You fight that at your own peril. You say the market's going to rally at your own peril. I mean, you've been wrong the whole year. At your own peril. I'm not telling you what to do. I'm just saying don't fight the Fed. That's it. That's it. We're positioned for downside, although we're prepared to add more of that and experience losses over the next single-digit amount of days going into that Fed meeting. We expect another Jackson Hole-esque type of event at that Fed meeting for Jerome Powell to come out and say, look, higher for longer. Even with a nice CPI, higher for longer. Okay? I think people are just trying to look for any sort of argument and then have it be like, oh, this is true, therefore everything I say is going to be true. Maybe, but you're directly fighting the Fed. I'm just not going to do that. I'm just not. When the Fed changes, or I have reason to believe they're going to change, yes, they're not doing that now. They're just entering the next phase of quantitative tightening. Just now, just this month, just 2 weeks ago. There has been no indication that they're going to be dovish. People were saying they were going to be dovish for weeks and weeks. And then Jackson Hole happened. And we had the longest consecutive NASDAQ losing streak since 2019. Longer than the COVID crash. Longer than the second worst start to the year. So everyone wants to say, oh, everyone's so bearish. No, okay? Everyone's so bullish. We, off of just getting a reality check, just having Powell say what the Fed had already been saying. They didn't make any policy decisions. They didn't do anything different. There was no fundamental there. Just a reality check. Market had the longest consecutive decline for the NASDAQ since 2019. That was the most recent pullback. That was the pullback from Jackson Hole to someday last week. And since then, we're up every single day. You get what I'm saying here? Get on position. I mean, I feel, bring on the short-term heat. I don't like it. I'm down 0.5% today. Ooh, 0.5%. But I'm ready for it because it's just going to give us bigger gains on the other side. Just giving us more ammunition to fire at, or a bigger target to fire at. So that's today's video. We'll see what happens. Obviously, it could be wrong, could be reading this wrong, could look like a total idiot in a month. But this is my take. Don't fight the Fed. That's today's video. And until next time, peace out. We didn't even get to the oil situation. I'm just going to include this. So Janet Yellen, people at the White House starting to say expect another hike, in oil end of this year. Okay? Everyone here touting, no, oil's coming down. Dude, oil's going up end of this year. China's unlocking. Strategic petroleum reserve is over. Europe's going to stop buying Russian oil, okay? It's going up. Inflation's not over. Rates are going to be higher for longer. We'll see what happens. That's today's video. And until next time, peace out.